You're listening to the HNC Let's Talk podcast, hosted by Dexter Brooks. Thanks for tuning in to HNC Let's Talk podcast. We partner with subject matter experts to provide candid conversations on health and lifestyle. Here at HNC Let's Talk podcast, mental, physical, spiritual, financial, and health are all connected. This episode of HNC Let's Talk podcast is sponsored by HealthNet Co. Together, we make insurance simple.
Good afternoon, everyone. This is Dexter Brooks. I'm your host with HNC Let's Talk podcast. I know everyone has had a lot going on for the last 7 days, but we still got a podcast to run here, and we have a great host. Our favorite host is back, Demetrius Radyen Johnson. He's going to be talking about the media, and he's going to be talking about the money, and he's going to be talking about what's happening today. How you doing today, Demetrius?
I'm doing really well. I can't complain. I'm blessed. How are you doing?
Man, it's been a busy week. We moved into a new office. Haven't actually moved, but we're getting things set up, and I've been running back and forth, pieces here, pieces there. But, but we're here about you. We're not here about me today.
Well, yeah, it's been busy on my end here too. I'm out here in Tennessee and in Knoxville, and so been moving around a lot lately. And I'm glad to be on the show. It's always a pleasure to be here and talking to you about money, my favorite topic. So just happy to be here.
Like they say, money, 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 money. In you.
Well, first I just want to express, my condolences. I feel like I would be remiss if I didn't touch on the topic, just because it is in current events with George Floyd and his family. I just want to, just express my condolences and send out my prayers and warm thoughts to that family. That has, caused a lot of turmoil and chaos in the country as of late. And, one thing kind of leads to another. And yes, today we're going to definitely be talking about the media and the stock market and money. And, a lot of what's been going on in the media as of late has to do with, things going on out there in the streets, and so,
Absolutely.
yeah, so
you're right. I'm going to send out my condolences to the families as well, the George Floyd family, because I was on Twitter the other day and I happened to mention to someone about not really understanding the racism in America. And I explained to them, like, I grew up in the South. And when I first left school and got employed with a small company in Georgia, had a colleague that was a friend. He was married, had got a divorce, lived in Alabama. And I shared the same story on Twitter. And he was a white guy. And I drove him back home to Alabama, I think, because after he got his divorce, he was like distraught. And when I got down there, I visited with his parents and his family. They got threats. I mean, they literally received threats because I was at their home.
Mm.
And they wanted to show me around the city and show me the Blue Lakes, because there's a lot of Blue Lakes in Alabama. I had to hide down on the floor in the back seat.
Wow.
That's how serious racism is. Now, that was years ago. And here it is, 2020. And there's not much of a change.
There's not much of a change. And, I came here to Tennessee about a month or so ago, and I'll be back and forth between here and Denver. And it's remarkable. People are very nice here. There's definitely that Southern hospitality that's here. But there's definitely also a bit of difference in, how people interact with each other. It's very polarizing here. It's very noticeable. You see stuff here that you don't see so much in Denver. You don't see as many rebel flags and that kind of stuff. And
No, you
yeah,
don't. But I'm not
you,
gonna. I'm not. I give Denver his kudos, but I do have an incident that happened in Denver because my, actually, as you know, my mother's here with me because she's ill and she's been with me for over a year and a half. And my siblings decided to come out when she was in the hospital about 6 months ago. And my oldest brothers, they drove from Georgia to Colorado, and they made a stop. And when they made the stop, when they got to Colorado, to Denver, the person asked them, "What are they doing here?"
yeah.
And I was like, "Did somebody really ask you that question?" He said, "Yeah." My brother said, "Yes." He said, "The person, are you lost or something? Why, what are you doing in Denver?"
And that's bizarre. I mean, in current times, you don't really, expect that kind of thing. And I've only been here in Knoxville for just over a month now, and I've been already called the N word, and
Wow.
yeah, and I'm like, really? I'm like, wow, haven't heard anybody call me that in a while. It's been years, and so I was kind of taken aback by that. It was some guy, he was drunk or whatever, but at the same time, I'm like, man, I'm really in the South. And so, it's one of those things that depending on where you live, you may see more or less of it. But it's still surprising and it's still, you know, hurtful and you still have to, kind of keep your head on a swivel. You have to be aware of where you're at all times. And
Absolutely.
so even in 2020, which is a shame, um, and with George Floyd and all, people oftentimes ask, why is there a need to specifically say that Black Lives Matter? And I think, and I'm going to talk about it from maybe a different angle than most, in that, human life has value, you know, and that's, me selling life insurance. There's two primary ways in which people can determine a need for life insurance. And one of those is a needs based analysis, which just looks at strict numbers and how much debt you owe and all this kind of stuff. And then there's another way that's called a human life value, and they look at how old you are, how much money you make, and your health and all of these things. And there's a monetary a number that can be associated with how much you can insure your life for. And we talked about this in one of the previous podcasts. And when we talk about human life value, and when someone's life is prematurely taken away from them, we need to have conversations about, this life has value. Black lives have value. And I think that it is, in our country today, what we're seeing is, that Black lives are being traded at a discount,
Oh
for
yeah.
lack of a better term. This man was killed for, potentially, passing off. I guess it was maybe a $20 bill, and the effect of having the police called on him, ultimately was that he lost his life. And there's this man's life has value. And so when we talk about what kind of charges are going to be brought, when we talk about whether it's going to be murder in the third degree or in the second degree or whatever, and we talk about how much time people are going to be spending in jail potentially for murdering this person, we have to say, well, how much is this life worth versus that life? And when we get people that are murdering Black folks and they're spending 1 or 2 years in jail, or 3 or 4 years in jail, when we've got someone in their 40s, or I don't know how old George was, but someone in their 40s or their 50s, and they are prematurely terminated. You're saying, well, this person's life is basically worth 3 years of this other person's life. you know and when we have a justice system where people are going to jail for much longer periods of time than their white counterparts, then in through my eyes, in a financial sense, it's a devaluation of that person's time, because if time equals money, and one person is spending more time in jail than the other for the same crime, then one person's time is worth less than the other's. And that person's life, looking through another lens is theoretically worth less than the others. And so, yes, people do have to specifically say that Black lives matter, that Black lives have value. They're not worth less than any other life. And so
Absolutely.
it's something that just has to be said, because if it's not said, then it's not heard. And if it's not heard, then people are either unaware of it or they just don't think about it. So, I don't want to dwell on that, but it is something that I do want to touch on and just have people maybe think about it through another lens. So,
Absolutely.
but that being said, the George Floyd thing, the murder has been in the news and it's been on the media a lot. And today we want to talk about in general, and specifically how the media can, potentially influence markets. And outside of all the doom and gloom and stuff, and I want to talk about some positive things as well. And I want to get people thinking about how the market can be moved. Okay. I'm a big advocate for people participating in the market, but I also want people to be aware of the fact that the market can be influenced by a number of different things. I was having a conversation with a buddy of mine on Facebook just yesterday, about different ways in which the market can be influenced. And there's certain people that look at fundamental analysis, and they're looking at breaking down the stock and how much money and their debt to earnings and all this other stuff, and the PE ratios and all these other things. And then there's other people that do technical analysis and they're looking at charts. But then, yeah, there's political influence, there's consumer sentiment. And then one way that the market can be influenced that's really not often talked about is through the media. They can create sometimes what we call a self-fulfilling prophecy. If the media hypes a particular stock, um, people start looking into it and they say, all right, well, this is a good thing. This is, they're saying that it's good, so it must be good. They're saying that it has a positive outlook, so, it's going to do well. And so they put their money into it, and then the share price goes up. And then, they're like, oh, they must have been right. And so, well, yeah, I mean, now that you put all your, everybody's put all their money in there, yeah, the share price has gone up. And that's, I guess that can be a good thing. But just be aware of when stocks are, being hyped. I'm more of a long-term investor in general. I do sometimes, seek out some opportunities out there, like Zoom, for instance. I'm on Zoom quite a bit lately. And, due to the whole COVID and everything, soon as Zoom went public, I said, oh man, I said, this thing is going to blow up. I said, this is going to be a really good investment. I don't know for how long, but it's going to be I thought it was going to be a good investment. Turns out, it's up over what 168% or something like that. I bought it at like 80 or 90 dollars a share. Bought it a few times, and it's doing spectacularly well. Some of that is hype. The fundamentals of the company are doing good, but some of it is hype, and some of it is people are really using Zoom, and they look really good for at least the long to intermediate term, and through my eyes. Um, but the media is also helping out with that. They're hyping Zoom up really well. And so, I mean, whenever I turn on the news, all I hear is about, certain specific stocks, and Zoom is one of those. And so, whether I'm a bandwagon jumper or not, I saw it as an opportunity. I'm not ashamed to admit, maybe I hopped on the bandwagon, but I got on a little bit early.
And I feel kind of bad because I didn't even think about Zoom, and I use Zoom as well. And I'm very impressed with the quality and the services that it provides. But I never thought about it on the stock side. It didn't even hit me. It didn't even cross my mind.
Well, what's funny is that, my grandfather was not much for, investing per se. He wasn't like, he was a farmer and he was a World War II vet, and, he was a tailor. But he did say, invest in the things that you buy, invest in the things that you use, because
Mhm.
if you're using them, then, chances are other people are using them.
Absolutely.
So I use Zoom, and I like Zoom, and I say, and I invest in Zoom. And people say, people buy up Nikes, they like Jordans or whatever. And so, yeah, you're spending $100 for a pair of shoes. You might as well, put some money in their stock and, make some money off of them too. That's my thought. So, but I want people to, as they're watching the news, and a lot of my clients are first time investors, or, maybe they just haven't been in the market very long, or maybe the only investments that they have are, in their 401k or their IRA. you know, I just want to caution folks, about watching too much of the news and making all of your stock purchases based on what media commentary, people are saying to buy. It, the market analyst or market commentator or whatever is not some sort of official licensed title that's given. Most of the people that are on the news are TV personalities. They're there to as part of a network show and to talk about things and to comment on things that have already happened. This stock has gone up, and then they want to tell you why that is after the basically saying that I just wanted to caution people. The people that they see on TV, some of them have some experience and they have credentials, but a lot of them are TV personalities. They don't necessarily have any clients of their own. They're just noticing market trends and kind of commenting on them, and you know, take it for what it's worth. I do watch a lot of shows. They oftentimes will bring CEOs on a lot of these shows to let folks know what's going on with them. And I watch those shows, like Restaurant Brands International. They own Popeye's Chicken and what is it, Burger King and Tim Hortons. And they bring folks on. They say, hey, this is kind of what we're doing. We're expanding in China. We are going to open up 1,500 new stores in China, and this is kind of what we're doing. So they'll give you a heads up as to what's going on, and they're making it public, and you can take action on that, based on what you think. But so far as the TV personalities, I would be cautious about dumping all your money into something that a TV personality is guiding you toward. And that used to be a big problem. Whenever I worked at Charles Schwab years ago, and I've worked at a number of different firms, but on the trade desk, they would say, be careful about what such and such is saying. He's telling you to buy, and what's he doing? Sell, sell, sell. And we had a bobblehead of a particular character that is oftentimes on one of those shows, and we would get calls all the time to say such and such said to buy this and such said to buy that, and so they would call in and place trades based on what he said. And so I think there was a time when they had to put disclosures on some of these TV shows saying that this is not investment advice. This person is a TV personality, and this is for entertainment purposes and all that kind of stuff. And it's for a reason. And so people should just definitely be aware of that. Also, especially for those people that maybe again don't have a lot of investment experience, the long-term approach is going to be the best for them when it comes to investing. And individual stocks are so risky to invest in and of themselves individually. Other than some of the larger old school, what they call blue chip stocks that are huge and that aren't really going to go anywhere anytime soon.
Blue, heard that in a long time.
Yeah, they don't really say that anymore. That's kind of an old term, but yeah, the old blue chip stocks, they're GE and AT&T and the big guys, they're not going anywhere anytime soon. They have some fluctuation, but they're not going anywhere. And one of the other things that people should be aware of when investing is that people are really attracted to the share price going up. The media gets they get people excited about share prices going up. And people see those charts and they say, oh man, this stock is going up and up and up and up and up. and they get excited about it. And so, for me, it's funny because there are certain stocks out there that I really like, and I like them for different reasons. Like Ford, for instance. Ford's trading at what, $5, $6 a share, right? And nobody's looking at Ford. It's not, it's not something that's going to skyrocket through the roof share price, but that's not really what it's designed to do. That stock is not set up to skyrocket like that. It's more set up to provide income and dividends. They pay out, I think it's like, I don't know, between like 30 and 50% of their income. And so, they pay out quarterly. And so the share price remains relatively modest, but you're getting, 6%, you know, 5, 10% dividends on that annually. And so, it just depends. There's a number of ways in which you can make money on a stock. You can make it through capital appreciation, which is the share price going up or down, um, or you can make it through income or dividend yield is what they call it. And
Right.
so, there's multiple ways in which you can, benefit or make money on a stock. Don't get all excited about, the next big thing. Um,
Yeah, you have to
that's
think about investing for the long term, for the long haul. Don't look
yeah,
at short turnaround.
yeah. Whenever I was younger, that was the big thing was, you know, I call myself a day trader. Whenever I first got my securities license, and I'm at the job and I'm trading stocks on my lunch break and stuff. And it's hit or miss. You make some money here. Sometimes you eat yourself up in fees, and you eat yourself up in, then you get taxes and stuff you got to pay and all that. What the best thing to do is to have a long term, a goal oriented way of thinking when you're investing. What's the end goal? And a lot of the same people that like to go up to well, I guess in Colorado, it's called Black Hawk or Central City to go gambling. A lot of those folks or those types of folks are the same people that like to, do Forex trading or do day trading and that kind of stuff. They want to make a quick buck. There's nothing against Forex trading, but, they just want to flip a dollar real quick and make 100% return on their money. But it's extremely to do that on any kind of consistent basis over a long period of time.
So
And
I'm gonna
so,
tell you how I'm from the South because I never gambled.
oh yeah,
I've
people.
never.
Yeah, I don't gamble, man. I do not gamble. I don't, you know, knowing that things are in the house's favor when you walk in that door. I mean, I just can't do it. I'm not one that likes to gamble. And if I do ever gamble, I'll gamble on something that is more skill based. Like I do enjoy playing pool, so I like
Yeah,
to
I've
match.
seen you playing pool. I haven't seen you personally, but I've seen you on some of your Facebook posts.
Oh yeah, yeah. If I can determine my gains and losses by my skill, then yeah, I'll challenge myself, and play somebody else and see what I can do. But so far as just putting my money, somewhere and letting it ride, that I don't think I don't have what you would call a high risk tolerance. People that tend to have a ton of money, they, may have a higher risk tolerance, or people that have a long time before they need their money. They might have a high risk tolerance. I personally am relatively conservative or moderately aggressive risk tolerance. I'm not what you would call aggressive or have a high level of, I don't want to take a high level of risk. And again, there's a difference between risk and risky.
Hmm.
Doing something risky is different. It's totally different than taking on risk.
Mm-hmm.
And so, um, you know, gambling to me is risky. You know, investing in a stock that may be volatile in the short term, but has a positive outlook long term. May have a higher degree of risk relative to other investment, but I wouldn't necessarily call it risky.
if I were to go into a casino, would I probably gamble? I probably would take a risk at the slot machines, and that's it.
Yeah, that's it. I've tried it a few times just to say that I did, and I see people that are at the slot machine and stuff, and they'll sit there for 8 hours at a time, and that's just not my thing. I don't get a lot of excitement out of that. Um, there have been times where I think I've played whenever Texas Hold'em became very popular. I sat at a few Texas Hold'em tables, got lucky, and made a little bit of money here and there. But it's not something that I don't know. It's not my personality to do that. I don't think. And so, nothing against gamblers, I guess, but I would prefer something to where the odds are in my favor over the long term. And gambling, that's not the case. Over the long term, it's been mathematically calculated that the odds are in the favor of the house. And knowing that in advance, it makes it to where it's difficult for me to do.
Yep. I mean, like, I don't even play the lottery, and it's not that because I don't believe in gambling or anything, it's that I never think about it.
Yeah, I don't think about it either.
You come across my mind, you go to the gas station, you fill your car up, you don't even think about it. You see people like the other day I was at the gas station, this guy was there. He had to have at least a portfolio of cards. It was about 3 inches thick, his cards were that, and he was just, checking them in and everything. And I was like, see, that's what I don't have that patience.
Yeah, I don't have that patience. And for me, and I understand, people, they say, hey, I can win a ton of money, right? I can win a lot of money. And you get that initial thrill if you do win $5 or $10 or, even, $100 or even $1,000.
Oh,
But
yeah.
I tell you what, if you would take all the money that the average, I won't say the average person, but the average person that plays the lottery, over a long period of time, if they would have taken that money and invested it in, you know, S&P 500 index fund, trust me, they would have a lot more money than they would have ever made playing the lottery.
But you got to realize the ones that you're saying that if they would have did this are the ones who don't know about investing.
And that's true. A lot of people don't know. It's like you don't know what you don't know. And that on my end is something that I take for granted because I've been in the investing world since I'm 40. I'll be 42 this year. I had to think about that. Yeah, I'll be I'll be 42 this year, and I've been in the investing world since I was 18 years old, and so that's always at the forefront of my mind whenever I'm thinking about what to do with money. I'm trying to pull on the things that I've learned and the mistakes that I've made because I mean, believe me, I've definitely made plenty of mistakes when it came to investing, especially early on in my career. You get your license and you think you know everything, and that's part of being young. And but as I've gotten older, you learn from people that have made money. You learn from people. Most of the people that I would talk to on the phone when I was on the trading desk, you know, a lot of them were older folks that had been in the market for a long time because being on the trading desk, there were people that would actually call in to place their trades. And nowadays, even in the late 90s or early 2000s, most of the people that were calling in to place trades were a little bit older. The young people were still placing their trades online. And so I would watch what the older people were doing and where they had their money. I had a lady that was in her 70s or so that would trade Occidental Petroleum, um, ticker symbol, I think it's OXY. I still remember it. And she would place options trades on this stock. And I learned more about trading options from this lady that would call in probably once or twice a week. And once she got to talking to me, we kind of hit it off over the phone. And she would specifically request to talk to me. And I learned more about options trading from this, 70 something year old lady than I did from Series 7 or any of the brokerage firms that I ever worked at. And she said, you know what? She goes, I've held these shares so long. She says, it doesn't matter how I trade them. I'm going to make money either way.
That's so true.
Yeah. And
That's so
so,
true.
and I learned a lot of options trades from her, but you know, and that's why I think I'm less likely to get caught up in a lot of the hype in the news, and watching some of these cable network shows and stuff. And I just caution other people behind doing that as well, because they do have the ability to influence the market. Um, but you got to realize, a lot of the folks they're just TV personalities, and they're commentators. They're like the people that when you're watching football, you know, they know a lot about it. They don't play the game, they don't play football. They might know something about it, and they know all the rules behind it. But a lot of them, some of them have played the game, but a lot of them haven't. And so, you know, just be mindful of that, because that stands true in the investment world, and this multi-billion-dollar industry that helps, that wants to perpetuate, people putting their money into the market. And
I know you mentioned about the influence of political influence, which is
yeah.
this is the first time I've ever recognized the political influence in the marketplace. I've never seen the political influence be as aggressive as it is today.
Oh yeah. I mean, one word from the president or someone in a position of power can cause an entire sector of the market to go up or go down. You know, I mean, for our current president says something about Twitter, and the next day it's down 5%. You know, if there's a law that is going to come up, or it, yeah, politicians definitely have an ability to influence the market. Um, recently we've had some issues with, I think it was senators that, had maybe sold off a bunch of shares right before an announcement of a law, that was going to pass. And, I think it was the Department of Justice, or someone, whoever's in control of investigating those guys. Um, Recently they said, well, we're not going to investigate them anymore. I don't know why they did that, but um, yeah, politicians definitely have influence over the market, and it's my opinion that some of these politicians should be held to the same standard as some of the insiders of the company. Yeah, if you're the CEO, or you're the chief investment officer, or you hold some position with a company, yeah, you have to disclose your trades, and things have to be transparent, so we can see what's going on, and we can see if people are moving in advance of publicly known information. I think that some of our politicians should also be held to at least a similar standard, if not the same standard, because they have the ability to cause an industry to move up or down. And so, you know, I, yeah,
They really
politics,
should, because I mean,
they're
um,
making the rules.
yeah, I mean, because I know recently there was some discussion about this. I can't think of the guy's name, but I think he's been appointed as a contractor for developing the coronavirus vaccine.
Hmm.
But he's also a multimillionaire and used to be involved in pharmaceuticals.
Oh yeah.
Now, my understanding is that Trump brought him in as a contractor, and as a contractor, he does not have to disclose or worry about conflict of interest.
Right.
So everything that he owns can basically go higher in the stock market, and he also have insights into every single company that he's ever done business with.
Yeah. Yeah.
And I'm like,
Yeah.
that is just so
It's
wrong.
Well, there are a lot of what I would call inherent conflicts of interest in our system in general. I mean, I don't know. When it comes to politicians, I'm not very active in the political landscape, but I can definitely identify some areas for improvement when it comes to transparency and opportunities um, to get rid of some potential conflicts of interest. And, whether that will be acted on or not, I don't know. I think if this happens enough, if more light is shed on the situation, then we could possibly see some change.
Yeah, but by the time we see the change, this man will be a billionaire.
Right, right. Yeah, yeah.
Yeah.
You're right. I mean, people have been making out like bandits, for a while. I don't think that it's something that's new. Um, I think it's just something that people are now becoming more aware of, one way or the other.
Absolutely. And it's like I say, I mean, see, if they would have appointed him through Congress, he would have had to go through the process of divesting. The fact that he was not appointed through Congress, the fact that he became in as a contractor, he doesn't have to divest at all.
Hmm. Yeah, that's interesting. There's there's always there's where there's a will, there's a way. And I mean, if there's a way to get out of disclosing something, or if there's a way to, when I was licensed, I was talking about whenever I used to so-called, day trade, um, depending on what firm I was at and what I was doing, most of the firms I had to disclose my trades in
Mm.
advance. Like I had to get approved before I could place a trade, and I didn't have necessarily any inside information. It was just because I was licensed and I could potentially have access to inside information. It wasn't
Absolutely.
that it wasn't that I did have any access, but I theoretically I could.
Right.
And so,
I mean, that's the same thing. Anytime you go work for a corporation, you have to let them know nowadays that whether or not you work for another company and whether
right,
that other company is a conflict of interest.
right, right. And there are a lot of, I don't know, just inherent conflicts of interest in general within the industry that I found. I mean, you know, as a person that had their Series 65 and their Series 6 and Series 7 and all these other licenses, it's like, well, as a broker, and I think we may have talked about this before, um, you know, if you are advising someone or if you're telling someone to purchase investments that have um, sales charges associated with them, that have commissions associated with them, when there are alternatives that don't, um, you know, to what degree are you held liable to say, all right, well, if you invest in this, then you won't have to pay a commission. If you invest in this investment, then you will have to pay a commission. It's very important that when people have a financial advisor, I hate the general term financial advisor. I mean, I don't hate it, but it's such a broad title. I use it, but whatever. There's licensed positions that you can have. There's an investment advisor representative, and they have their Series 65, and then there's brokers. But a lot of people walk around and say, "Well, I'm a financial advisor," and that what does that mean? And so, just be careful whenever you're talking to somebody that is dealing with your money. They need to be extremely transparent about how they're paid. As a client, you have a right to that information. Say, how much are you getting paid on this? How does this work? And if you're dealing with a broker, a person that has a Series 6 or Series 7, just know that their broker dealer firm is getting paid off of commissions, loaded mutual funds or stocks or whatever. That firm is getting paid as well as the broker themselves. And nowadays, the market is becoming more and more efficient. And so, there are a lot of opportunities to invest and not have any commissions associated with it. And with those commissions, um, doesn't necessarily guarantee any fiduciary responsibility,
Yeah.
especially with that broker license. We talked about that before. That doesn't necessarily mean they're responsible for, doing what's in your best interest per se. Those investment advisors, people with their Series 65 or CFP or whatever, they have, some fiduciary responsibility. So, um, just be aware of the type of person that you're dealing with and how they're paid and all that. Like I said, I don't, nowadays I don't charge my clients anymore. I give investment guidance, I give guidance and education. And then I let people, determine based on what's available, what they feel like is going to be best for them. I feel like if they have the same level of knowledge that I do, then they're able to make just as educated of a decision as I am about where to put their money. And, dealing in long-term investments, for me to make money on their investments is not necessary. Again, I'm not structured that way. I sell life insurance, and we talked about this in a previous podcast. Life insurance companies, they pay me a commission. I don't get necessarily a commission or get paid directly from my clients. And regardless of whether they go directly to the insurance company or whether they go through me, they're going to pay the same amount for their premium. And, when you're developing a long-term plan for someone to accumulate wealth, again, my opinion, my belief is that life insurance in one way or another has to be part of that long-term plan. You got to have the offense and the defense, and the life insurance is the defense. And depending on what kind depending on what kind of life insurance you buy, there can be a little bit of offense built into there as well. But its primary function is to provide for the beneficiary. And so, in case you come up with this plan to invest and to retire, and you're going to live to be 100 or however long. But if you die prematurely and you're married or you have family, you want to be able to um, leave them, some money as well. So, it's the what ifs in life, you use the life insurance for. But, I just again want to caution people to not, um, get caught up in all the hype. You know, it's a multi-billion, if not trillion-dollar industry to get people hyped up, to invest in the next, in the dot com, back in whenever I got in the industry, it was all about the dot com era. And so many people got hyped off of what was going to be the next big thing. And a lot of people lost their money. And so, I want to caution people, from that, and, make sure that not only are they investing, but they're also protecting the value of their life.
Now, I want to let everyone know that Demetrius has agreed to be on the podcast weekly. And even though it's sometimes he's in transitions, he's like in between states. He's a traveling person. He's traveling from Colorado to Tennessee, so there may be times where he may not make that weekly event, but he will be on the next week. And so, because he's continually going to educate everyone on investments and how to invest. This is his expertise that he's been working on for, I guess you could probably say, since he was born, really.
Yeah, something like that.
He truly has it down packed. So, Demetrius, let me ask you, on closing, what advice would you give the audience in today's, and I wouldn't say the market is volatile now, because I did notice that the market seems to be slowly coming back.
Mm-hmm.
How do you advise people that don't really know if they're going to have the income to invest? Because we have so many people unemployed. What do you have to say?
Well, and I always go back to the bread and butter. You want to make sure that you have your basic needs met, and if you've been able to survive through this whole COVID thing, and if you got a stimulus check, or if you got some money coming in, if you get a tax refund or that kind of thing, um, you know, consider, um, you know, restructuring your budget in such a way that you can use your tax dollars, or if you did get a stimulus check, participate in what I feel like is being orchestrated as the greatest American comeback. And the market tanked. We when our president got into office, there was a lot of speculation And that really drove the market, and the market was doing outrageously well. And then, we have COVID and things, really tank, and everybody's talking about recession. But with recession also comes opportunity. I mean, there are opportunities to invest at prices that haven't been seen in decades.
Mm.
And so, throughout my lifetime, I've seen a market do something similar to this, not necessarily to this degree, but taking these huge dips. This is the third time I've seen it. I saw it during .com, and I saw it, 2008, and we're seeing this here now. And each time was an opportunity to put some money in the market and participate in the growth. And so I just recommend that, again, people educate themselves and find a way to participate, um, in the market. Our economic system is set up in such a way that in the end, over the long term, the market will survive. And so I recommend people find a way to participate. I mean, I took a few leaps of faith, and I did make a little gamble, on a few stocks, and they ended up paying off. But look at what's going on. Pay attention, and participate. So that's really what I would advise people to do. And it doesn't take a lot of money to invest. Like I said, Ford was trading at, I'm not recommending Ford specifically, but I'm just saying there's a lot of stocks out there, value stocks, that are trading at a discount, or trading at prices that they haven't traded at in quite some time. It is an opportunity to kind of go back and say, hey, this stock is trading at the same price it did in 1997, and take advantage. So that's kind of my little 2 cents, is to, make sure that you participate in whatever amount that you're able to afford.
My father always said, invest in yourself. And that's something I've always believed in. And most people don't think about that in the right perspective. They think about, when you say invest in yourself, that means go to the mall and buy yourself something new.
Yeah, they think that means treat yourself. Yeah, treat yourself. And that's a common thing in our society, is that we're taught, you work hard and you treat yourself, and you reap. You want to harvest, what you all these seeds that you've planted, and you've worked hard, and now, but people, when you reap prematurely, when sometimes you get bitter fruit. If you're frequently reaping and frequently, you know satisfying yourself with the fruits of your labors, then that cycle is something that, is not sustainable long term. That just means that you're going to be out there working a lot longer if you continue to do that. If you just delay, um, picking that fruit, then, it'll be a lot bigger and a lot sweeter in the long term.
Now, what I would like to do on our next podcast is for you to discuss the difference between Roth IRA, and to break them all down so people can have a better understanding.
Yeah, absolutely, and that's something that's very important. Talking about one of the most common questions that I get is, what's the difference between the Roth, and which one should I do, and
Mm-hmm.
how much can I put in there, and how does it work? And we definitely want to talk about that, because we have an extended tax filing deadline this year. And so one of the things that we're going to be talking about maybe is making uh, prior year contributions to your IRA account, and what that means, and how that can be extremely beneficial to you.
So I think that'll be something great that we can bring up on the next podcast, and maybe do a couple of slides on that so people can get an idea, so they'll know, because that's really
Yes.
important to know those two different. Because when most people do their investment, they do investment, especially African American, they do just the 401k.
Right.
Well, they don't worry
Right.
about it, but those who don't have the option for 401k, there are other options available,
There
and
are other
they need to know about those options.
Yeah, they need to know about those options, and they also need to know that, there are certain companies out there that maybe are going through distress. There's certain companies that are no longer doing that match on those 401ks. And so the value of a 401k that does not, match, is somewhat decreased. And so, we have to have conversations about that and what to do with those 401ks when you're no longer working at that employer, because we have a very high unemployment right now, which means that there are a lot of 401ks that are out there, just sitting out there that could potentially be rolled into IRAs.
See,
So we'll talk about that.
So that should be the next topic. What to do with your 401k when you're unemployed.
Yes. Definitely want to talk about that.
All right.
All right.
All right, Demetrius, man. I want to thank you again for joining HNC Let's Talk podcast. And we look forward to, the audience going to look forward to listening to and hearing you again next Wednesday. Hopefully at the regular time of 3:30, but if not, it'll be. But until then, here we go.